G'day everyone. Well, it's been another big week in the world of tax and accounting. The federal government continues to dominate the headlines following its proposed tax changes, and we've now seen an important development with the government effectively backtracking on part of its original capital gains tax reform package, which is really good news. But most notably, the proposed turnover threshold for access to the small business capital gains tax concession looks like it's going to be increased from $2 million to $10 million, which is great news. On face value, that's a positive outcome for family businesses and farming enterprises. It potentially extends access to valuable capital gains tax concessions to a much broader group of businesses than originally proposed. But of course, the devil's in the detail, and already a bit of information flowing through already sort of suggests that there's going to be a bit more to it. Might not be as good as it sounds, but anyhow, we'll just wait and see what happens. But I think, generally speaking, it is a positive. With over just 10 days to go to the end of the financial year, obviously our focus is remaining on just finalising a lot of the tax planning and tax planning strategies. Well, it's very busy but rewarding time catching up with as many clients as possible, just fine-tuning what needs to be done, just really helping preserve wealth, improve cash flow, reduce tax, and really provide a bit of certainty moving forward. Just a quick reminder on super contributions. Make sure you get them in nice and early next week, just to make sure everything clears through and lands in the superannuation fund accounts. Don't leave it to the last minute. And just put too much pressure on yourself as next week ticks by. We're also spending a lot of time helping clients prepare for the introduction of same-day super from 1 July. Probably the main issue there is just going to be around cash flow. Probably for a month or two, just really doubling up. So if you haven't sort of thought through this yet, just make sure you give us a call, because just cash flow is going to be the key thing there. This week's articles, we're just focusing on some of the ATO articles and what they're looking at in terms of what they're focused on and targeting. There's a lot, so one of them around the hidden business risks families often miss, compliance obligations for family businesses, and just generally speaking, just why proactive planning matters around investments and the different decisions that can be made. So as we approach June 30, very important quote: the difference between a tax cost and a tax asset is often planning. So we do often talk about paying tax, but making sure that it becomes a recoverable asset in the future. So I think a lot of you are probably sick of me saying that, but just make sure, I think below in the email, the checklist for tax planning checklists, and also the same day superannuation checklist as well. So grab those just to make sure you've look over those and make sure you're ready for the new year. Apart from that, just have a great weekend, and pretty busy week next week. But if you've got any questions or anything you want completed before the end of June, don't hesitate to give us a call. Thank you.